This November, consider these 5 stocks. So, with November just around the corner, I feel like it's about time we take a look at what seems to be the top picks for the month. And while the situation on the stock market can change very rapidly, especially with all of the volatility that we have seen lately, the companies that I'll give you today are more than capable of weathering the storm. After all, if they weren't safe and reliable, I wouldn't really be willing to give them my money. Hello everyone, and welcome back to my channel. My name is Antoaneta. Before we dive into our portfolio discussion, I just want to remind you to please like and share the video with your friends and family if you want to see this channel grow. Making this video is an absolutely delight, but it takes a whole lot of time and effort, and seeing your feedback makes it all worth it. So, as I already mentioned it today, we are going to focus on my top 5 most interesting but still safe and reliable picks for November 2020. They are Activision Blizzard, Idexx, Slack, AT&T, and of course ZYNGA. On top of all that, I will also throw in a couple of additional suggestions at the end of the video, so stay with me and I'll give you some bonus. We won't go super in depth on them today, but they are all great businesses that I'm personally very interested in. Let's start with Activision Blizzard. Current price is $76.40 and the symbol is ATVI, market cap $58 billion. Price earnings ratio 32.35, earnings per share trailing 12 months $2.34, dividend amount in yield $0.41. Starting it with one of the major players in digital entertainment field, Activision Blizzard sitting at about $80 per share. Despite the heated online debates and naysayers, Activision Blizzard has been doing pretty well for themselves. For Q2 2020, the company's revenue was up 38% from last year, while their operating margin hit 39%, with earnings per share skyrocketing to 74% year over year. This quarter's operating cash flow was $760 million. Over the last year, Activision Blizzard generated $2.14 billion in terms of operating cash flow. Now, user engagements are a bit interesting here, especially if you've been keeping up with the online discussions. Over these last few years, the vocal minority of fans have been very negative towards Activision Blizzard. And if you were to take the heated debates to heart, you would think that the company is doing poorly. In reality, however, the situation is quite different. Activision Blizzard boasts 428 million monthly active users for Q3, split between the Activision segment 125 million, Blizzard segment 32 million, and their social and mobile publisher King 271 million. Suffice to say, their 2016 acquisition move was definitely the right call. Additionally, Activision is one of those companies who actually benefited from the lockdowns due to their position in the digital entertainment industry. The more time people spend at home, the more likely they are to buy games. And while the pandemic is not going to be around forever, hopefully, I'm confident that Activision Blizzard has a bright future. Their business is growing steadily and they are continually making the correct moves. The second one on my list is Idexx Laboratories, IDXX. Current price $431.05 is up to 3rd of November. This is the prices on 3rd of November. Today's change is minus $16.98, market cap $36 billion, price earnings ratio 74.06, earnings per share trailing 12 months $5.74. Here is a fun fact for you. The pandemic and subsequent lockdowns have caused a surge of pet adoptions. And I mean, I get it. People are stuck at home. They can't go out and hang out with their friends. They've bored and maybe even a tad lonely. And adopting a cute, fluffy pet is apparently the best cure for that. In a recent TD Ameritrade survey, 33% of respondents said that they have considered fostering or adopting an animal or have already done so. Additionally, 89% of the people who already have a pet confirmed that their animal companion was definitely the key to coping with the lockdown. In a bizarre twist of events, animal shelters in a number of cities across the world reported that they are completely out of animals to foster or adopt. I guess there is at least something positive coming out of this whole pandemic situation. But how does all of that help our investment strategy? Well, the increased interest in pet adoption had a positive impact on all the vet and pet businesses. And Idexx Laboratories fits right in this category. Idexx specializes in diagnostic equipment and consumables for vets. For those of you who aren't fortunate enough to own a pet, I'll specify that vet care is the second biggest expense when it comes to animals. It's right behind food. Add to that most pet owners value their animal friends very highly, and you get the result of the next survey, which was done in July. Almost 90% of respondents noted that if things go from bad to worse, they are willing to cut down their personal expenses to provide their pet with whatever it needs. With a $30 billion plus addressable market to 2.5 billion revenue, Idexx still has plenty of room to grow. And by the way, don't forget about Trupanion. There's another great investment. Let's move to Slack. Simple work. Current price $25.58. Market cap $14 billion. Earning per share trailing 12 months minus 1.77. Slack Technologies is yet another one of those exceptional companies that managed to find opportunities to grow during the lockdown. For the period between February 1st and March 18, the California-based SaaS software as a service business enjoyed a massive increase in sales, earning about 7,000 new paid customers. For those of you who somehow haven't used Slack yet, I'll tell you that it's basically an advanced workplace communication platform. It combines chat channel functionality with direct messaging and file transfers, all in one neat package. I've already touched upon Slack Technologies in my previous videos, so find the link below the descriptions. Let's move to AT&T, the ticker symbol T. Current price $27.02. Market cap $192 billion. Price earning ratio 17.86. Earnings per share trailing 12 months 1.51. The world's larger telecommunications company and one of the major telecom players in the US, AT&T is one of the so-called dividend aristocrats, a list of SP 500 companies with a proven record of consistently increasing their dividends for 25 years straight. They offer internet, cell cable and satellite TV services. The company headed by John Stankey boasted an impressive number of 243,500 employees and had a revenue of $181 billion for 2019. Let's move to ZYNGA. Current price, it's $9. Market cap, $9 billion. Earning per share trailing 12 months, 0.03. ZYNGA is yet another major player in the entertainment industry. They are an established mobile gaming company whose primary revenue comes from mobile ads and in-app purchases. And let me tell you something about ZYNGA, guys. If you haven't personally experienced their products, then I'm willing to bet that you know at least one person who has. For Q2, ZYNGA hit a revenue record of $452 million, up 47% year over year. And do you want to know the best part? You can grab a share of ZYNGA for under $10 now. Well known for its successful acquisition strategy, ZYNGA has purchased several popular mobile franchises and quickly integrated them into the family. One of their most recent acquisitions happened less than 30 days ago, on October 2nd, when they incorporated Rolik. If you aren't big into mobile games, don't worry, because I'm not too fan of them either, but still I did the research and I'll tell you about Rolik as well. They are the publisher of two of the most downloaded free mobile titles in the United States App Store for Q2, Go Nuts 3D and Tango Master 3D. There is apparently a new category of mobile games, dubbed hyper casual, and it's incredibly popular. Basically, its titles are entirely structured around the KISS principle. They are so intuitively developed that anyone can start playing immediately without having to read any hints or guides. Their latest acquisition puts ZYNGA at the head of 8 forever franchises, or in other words, they own 8 separate franchises, each of which brings in a minimum of $100 million annually and are expected to continue doing so over the following 5 years. And on the top of all that, ZYNGA also has a special trick up their sleeve. They regularly incorporate new features into their games, doubled both bits, which drive up interest and promote long-term engagement. And thanks for being with me till the end. And now, before we call it a day, I'll give you your bonus. I'll also mention a couple of companies that I'm following closely. As soon as the price is right, I'll be adding more of them to my portfolio. And these are Tesla, Amazon, Facebook, Microsoft and Google. None of these names should come as a surprise. They are just really solid and overall great companies when it comes to long-term investing, especially now after their amazing earnings from last week. So congratulations, you've reached the end of today's video. If you stuck around and enjoy your time, please don't forget to give me a thumbs up and share the video with your friends. As always, you can feel free to leave your questions, ideas and experience in the comments down below this video, and I'll get back to you as soon as possible. And for my quick plug, I'd like to give you a shout out to Morning Brew. Morning Brew offers a daily newsletter service that helps me stay on top of the latest events and changes in the business world. Every morning, I wake up to an email with a neat summary of the most important developments from the financial world. That way, I don't have to spend any time or effort scouring the internet for info or reading dozens of different articles just to keep up with everything that is going on. And if you want to give them a shot, I'll leave you a link down in the descriptions down below, and you can subscribe as well. So, thank you for staying with me, and till next time, stay green and motivated.